Hello, my name is Christian Jane Kongstedt, and this is my update for the first 5 months on eToro, where I'm trading and investing under the name of CPH Equities on eToro. And I've been having maybe around 1,000 new copiers over the last month, so I thought I'd make this update for you to know a little bit more about who I am and also what I think about the markets. So just to jump right out into it, I'm going to speak about my performance, and you can always check my profile CPH Equities on eToro, and then a bit about the portfolio and how 2026 has gone so far. I also speak about what I've been changing recently and the bullish and bearish arguments for the rest of 2026. So let's jump into it. And for all of those of you who are new to copying me or don't know so much about me, maybe you're just watching this on YouTube, you can search for CPH Equities on YouTube and you will find my channel, and then you will find this video. And I'm also going to post a link in the description text here so you can find this video easily. And this video is like only 1.5 minutes long, and it's going to tell you about who I am and how I invest. And hopefully it's going to give you a good picture of how I invest on eToro. Over the last 9 years, I've been having annualized returns of around 22% on average. This year it's 21%, so it's almost at my average, even though only 5 months have passed so far. I've been having 9 positive years and only 1 negative year so far. And at this point, I have returns of almost 460%, which is more than twice as much as my benchmark, which is the S&P 500. All full years except one has double-digit returns so far. And you can see the chart here of my overperformance over time. And also this year, I'm around 10 percentage points better than my benchmark, which is the S&P 500. So I'm at 21% today. My goal is to perform on average 8 to 9 percentage points better than the S&P 500. And my goal is to get the account to $1 million. It's currently sitting at around $180,000. So according to my calculations, it's going to be around 12 years to reach this goal. And right now, I'm ahead of the goal. I'm supposed to be at 163,000 in August this year, and I'm already like $17,000 ahead of that. But then again, it's not something that I'm going to put too much weight on, because you have good years and you have bad years. So on the good years, you should try to get ahead, so you have something to give from when you have bad years later. So that's just an average. And right now, I'm ahead of my goal to get this account to $1 million. And you're welcome to follow me, of course, during this challenge. I'm going to update it once in a while, every time I have these videos. This is my performance for this year. And as you can see that both on a year-to-date basis and also on a one-year basis, I'm overperforming the market quite clearly. The portfolio right now, I've been making some changes, whereas previously I've been having quite a lot of strong exposure to big tech, the largest tech companies of the world. And I've been changing this allocation a bit more into AI infrastructure. So it's more about building the chips, building the data centers, and all the activities surrounding that. So I think that this AI trade has been broadening out. So now it's like a more broad AI infrastructure trade that I'm part of. And I want to have this in my portfolio alongside with some more defensive positions to offer protection if the market turns around. So I've been going from having a large NVIDIA position, which I had for the last 3 years or a bit more, and had gains of 1,000% of that position. And then I exited NVIDIA and started to invest in smaller like still very large companies, but smaller stocks like Lam Research and Celestica. And I've been broadening this positioning out to have data center focused investments with stocks like Sterling Infrastructure and Argan, which is some of the positions you can see in my portfolio. And at the same time, what I've been using a lot of time on this year is to build a very strong defensive position, because I think that even when things go very well, you always have to be very focused on what happens when the market turns around and you get negative returns. You want to have some defensive positions that can protect your portfolio in that situation. So that's what I've been building out this year, calculating correlations and a lot of other things. So it's kind of a mathematical exercise for me to optimize my portfolio so it's ready not only for a very strong bull market, which we're seeing right now, but also if it turns around and if we see a correction. I've been backtesting a few different strategies, and using AI to program this makes it much more easy to do those backtesting. And right now I'm following two different strategies. One is focused on the S&P 500 and one is focused on smaller stocks, which is based on mainly the Russell index in the US. And these strategies have been performing very well in my backtest, and also we're seeing that in the live markets they are doing very well, because most of my portfolio is actually based on this positioning this year, and it's already doing 10 percentage points better than the overall market. So I'm very happy with the backtesting I've been doing, and also to see that these strategies perform as well in the real markets. It also helped me to pick some really strong positions over the last years. One of the best ones was, aside from Nvidia, which was a 1000% gain, I invested in Micron 2 years ago. You can see when I bought it here, it's a bit more than 2 years ago actually. It's on the chart here. I bought it in April 2024, and it's up 763% in 2 years. So it's basically just a very strong position, and still one of my key positions. And you may think about that maybe this stock has run too far, but if you try to look at the numbers and see how their actual income and how their revenue have been growing during this period, it's actually not something that's taken out of the blue air. It's really has a solid basis in the fundamentals. So obviously short term there could be corrections. It's certainly possible when you have a position that rises 90% in 1 month, which is what it did in May. But those short-term corrections that we may see in Micron should only be buying opportunities, according to me. So I think that's certainly a very interesting company, and a company that I'm going to keep on having in the portfolio for some time to come. And I'm going to explain why later when we talk a bit more about AI. Also, Caterpillar is one of the stocks that I've been investing in January, in February, and March. And the first positions are up about 47%. So it has been a very strong position. Also a position that has been selected by the algorithm that I've been developing. So I think that's certainly some kind of proof that things are working well with my algorithms. And Argan is another very strong position that I've been having for almost 2 years now. They are building the power for the AI, the natural gas power stations for the AI trade. And I think that's a key thing to start to look at, not only the companies that are building the chips, but also who's building out other parts of the infrastructure, which could be the electrical infrastructure, but also the infrastructure that's based on the data centers. So you will see a lot of interesting positions in my portfolio related to this. Sterling Infrastructure is another one, a strong position. They are basically laying the groundwork for new data centers, and they have been rising. They had a very good day like a few weeks ago where the stock rose 63% in one day due to a very good earnings result. And I think that it's certainly a company that's also part of this data center build out. So it's a company that I could recommend that you check out. It's also a part of the portfolio. So the current markets have been very bullish, obviously, especially due to the AI trade. And if you look at the fundamentals and the earnings results from the US companies, it's one of the best earnings seasons in 5 years. So basically, the fundamental results are just very, very good, very strong. And for this reason, I stay fully invested in the market, even though there are some risks in the markets as well. And that's something that we can talk a little bit about later. The demand for AI infrastructure is very strong. We are seeing also that some of the software products like Gemini Enterprise are having surging demand. It rose 40% quarter on quarter with regards to paid users. And also we're seeing token users, AI token usage soaring a lot. And we're seeing very strong adoption in retail and financial services. So we should just take Google Cloud as an example. That's the best example, and it's also one of the key positions in my portfolio. We're seeing revenue up 63% year over year. And that's also a strong testament to what's going on in the AI theme. The demand is just very, very strong. And that's the reason why I keep being invested in this theme, even though I'm also very attentive to the challenges that we can see in this theme. So I think one of the reasons why I'm really bullish on this theme is that we're moving from chatbots to AI agents, which means that right now most of us are just like chatting with ChatGPT or with Claude or Gemini. And we're going to move from that to a world where agents, AI agents that's actually performing tasks on our behalf is very common. So right now we may only have like a few 100,000 agents, but in 1 or 2 years we're going to have millions of agents. And then I think at the end of this decade, we are probably going to have billions of agents and more agents that there are people in the world. And those agents, they're going to do all kind of stuff for us. They're going to like pay our bills for us, like all the practical work. They're going to book our restaurants. They're going to negotiate the fee with the carpenter, and a lot of things that a personal secretary would do for us. So we're going to have access to some of the same things as the very rich, the very most wealthy people of the world have today. And this build out of this AI agent theme, going from a few 100,000 agents to billions of agents, that's going to require a lot of more infrastructure. And that's the reason why I stay invested in this theme, because it's very bullish for many of the companies that are involved in this build out. So everything that's related to those token factories, which is the AI data centers, is soaring in value. And I'm doing to the best of my ability to try to pick those companies that are part of this build out and has more room to run. So some of the risks that are most obvious are obviously the situation in the Middle East. We have a still very critical situation around Iran and the Hormuz Strait. And right now the market is pricing around a 48% chance of the market of the Hormuz Strait traffic returning to normal by July 31. And if you look at the odds for late this year or in December this year, then the odds are obviously much higher for traffic returning to normal in the Hormuz Strait. But right now, there's still challenges. We don't have a real agreement yet, and it seems like a lot of negotiations has to take part. So obviously, this is a risk that I'm following a lot. That's a risk for the market. So in general, like it's going just very well for the companies in the US, but this is obviously a risk because it can push the oil prices, it can push inflation, and that's obviously not a good thing for the stock markets. A little bit less talked about risk is China, the possibility of China invading or blockading Taiwan. And we have actually seen this chance lowering over the last weeks since Trump visited China. And right now, the risk is not too high of China doing an actual invasion of Taiwan or maybe a blockade, but it's obviously something that we should follow very closely because it's related to one of my big positions, TSMC. But basically, if something happens around Taiwan, some kind of blockade, it's going to hit the whole stock market quite hard. So that's a risk that we should be aware of as well. Obviously, none of these risks are large enough for me to jump out of the market. I'm going to stay invested, 100% invested in the markets, but it's just very important to have those considerations when we speak about the markets, and also when you set your portfolio. And when I set my portfolio, I try to look at companies that also hedge this risk, so I don't have too much risk that's involved if some of these scenarios turned out to be true. And then inflation in the US is accelerating again, and that's obviously partly due to oil prices and energy prices in general rising. So that's something to be aware of in the future, that also we could see rising interest rates, and this could be a risk for the stock market. So that's something that I'm following very much as well. So the main question is, would you be bullish or bearish in this environment? And for me, the bullish arguments are still the best ones. It doesn't mean that it's going to be a straight line up from here. We've been having a lot of gains in April and in May as well. So short term, the markets may be a little bit overbought, but it's still not something that would make me jump out of the markets and get back in, because the fundamentals are very strong. We have been seeing the strongest earnings seasons, which has been one of the best in 20 years and at least the best one in 5 years. We're seeing AI-related investments accelerate in 2026, supporting growth, and also we probably will see the first real productivity gains this year. So this is part of a longer trend. And when I listen to the earnings calls, for instance, the latest earnings call from Sterling Infrastructure, I hear them saying that the AI data center build out is a multi-year trend, and it's something that they expect to accelerate towards the end of this decade, which means that we're probably not at the peak yet of this build out. I think it seems like we have quite a few years to go. So I'm going to stay invested in this trade. And also it's going to be interesting to follow during the next 1-2 years if we're starting to see real productivity gains from AI, because at least when I work with AI, I see a lot of opportunities. I see how I can become more productive myself, how I can do like much more back testing, much more testing of my portfolio. I can do a lot of more stuff and do it much more quickly. So I think that the gains that I'm seeing now and a lot of people are seeing will sooner or later proliferate to the rest of the economy, even though it may be slower than some people, the most optimistic people may think. So I think we're going to see slowly the first gains coming this year, and we're going to see the demand still being very strong for AI-related services. So that's the reason why I stay invested in this. And the two, I would say, main risk is that the inflation seems to be rising. So that's something to keep an eye on, how to handle this situation. And also geopolitical tension, especially in the Middle East, is one of the key things to monitor and to try to focus on and evaluate when you are setting your portfolio. So I try in my portfolio to have some defensive position that also hedges my risk if some of these scenarios turn to be true. So I have a very offensive positioning with the AI infrastructure trade, and then I have a lot of more defensive positions in my portfolio, which you can see if you analyze it and you go to Toro and look at CPH equities. So these are the words for now. I hope this gives you a good understanding of how I see the world right now and how I'm investing and how I see the rest of the year. So there's only left to say that I hope and I would urge you to make investing a habit, to take a little bit out of your paycheck every month and invest it, because that's something that's going to give you more freedom later in your life. So doing this now is going to be something that you're not going to regret in the future. So these are the words, and you're welcome to comment on my feed on YouTube and in every other places where you see this posted. Thank you very much. See you next time.